What's up, traders? Sandro O'Connell with Pristine Capital coming at you with yet another market recap video. It is August 18th, 2021. Please go ahead, click the like button on this video, subscribe to the channel. Hope everyone had an awesome trading day. Today, we're going to be talking about the price action in the indices. We're going to go under the hood, check out our sectors and style factors. We're going to talk about my trading for the day, and I'm going to be perfectly honest. Today, in terms of just like process, in terms of, just doing the right thing, being in sync with the market, today was my best trading day I've had in a long time. So let's dig deep into this. Quick first disclaimer, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades or anyone's trades for that matter. Okay, box scores for today. S&P 500 finished down 1.09%. Incredible close. Today was such a legendary day. We had the NASDAQ QQQ finish down 0.96%. We had the IWM small caps. They were our front runner, nice and green throughout almost the entire session. They closed down 0.87%. I traded the small caps pretty heavily today. And then the Dow Jones finished down 1.05%. So what are we seeing when we're looking at this market now, team? So over the weekend, I sent out to all Pristine Capital members, basically a message saying like, hey, one of my risk models triggered. I don't feel comfortable in this market right now. I'm going to be pretty risk off, for the foreseeable future. And this right here, this was the 16th. So this was Monday, I believe. Yeah, so this was Monday. Then Monday comes and, we had a little shake and bake to the downside, but we ended up resolving higher. Then the floodgates really opened yesterday and today. So let's talk about yesterday. We tagged the 20-day moving average and we bounced right off of it. Today we pierced right through it at the end of the day. It was insane. So let's go to our hourly chart. And as of right now, this thing looks pretty technically broken. I mean, once you're below the 20-day simple moving average, and when you cut through it decisively like this, go ahead and look back at the chart of the S&P 500. Almost every time we do that, where it's boom, we're right through, it's almost always, not really the best day after. And that a lot of times is when the market, will go ahead and test the 50-day simple moving average. So if you look in some prior instances, let's take a look. We might be able to find one. So this would be, a pretty good example right here. So we pierce right through, and then next day, not so great. And then the following day, not so great. When you lose that 20-day, that's definitely not a good thing. And it's really just saying, hey, a lot of market participants are exiting the marketplace. They're going ahead and they are selling. So we're going to have to see what happens tomorrow. But check this out. We have the Fed minutes today. Fed minutes came out at 2 p.m. Usually in my experience, the Fed minutes are kind of a nothing burger. It's really backward looking. These are the minutes from the last Fed meeting. It's not like anything about the future. It's what they talked about weeks ago. Fed minutes come out and we just rip to the upside. And I was in the middle, while this was going on, I was in the middle of a webinar for our community. So we were just talking about the minutes and we were like, oh yeah, look, like everything is just ripping. It's kind of crazy. Well, we were saying like, the first 15-30 minutes after, like, you can't really make much out of it. And then everything just ripped to the downside. Like everything went from being on the high of the day to the low of the day within a span of like 5 minutes. So we were laughing. I was like, there's definitely some pajama trader that just went like all in on the high of the day. And then, from there, things started to cascade. We had this sideways price action, but we ended up resolving quite lower. NASDAQ, QQQ, let's see how that one is looking. Yeah, the QQQ had already lost the 20-day 2 days ago. And now this is more follow through. Now we're trading inside of our monthly value area. So that's, another indication that the trend in the intermediate term has flipped from an uptrend to a neutral trend. So next level to the downside here is this monthly point of control at $360.69. Russell 2000. Russell 2000. So this one, I played it for a bounce early in the day, made some money, worked out very well. And then this thing really just broke to the downside. So we are now on the Russell for the first time, trading below the 200-day moving average. Is that a good thing? No, it's definitely not. And nobody knows the future, but that's like, in terms of like edge, and is this a great environment for getting long and like taking risk? I would definitely say no. So the last time the Russell was below the 200-day was back in, what is this, September? Yeah, really far back. Then we had the crazy run after the election, and this is our first time below it once more. So this is huge. This hasn't happened in a long time, team, almost a year. And then the Dow Jones is down 1.19%. Yes, this is another not really so good look. Like, we hit this R1 pivot level, and now we're back inside of value. So this is saying, hey, institutional interest in the market, you know, they're selling. And there's a lot of reasons to not really be so bullish on the market qualitatively. You know, I try to just stick with the price action, make sure that's what's guiding me. But we have Jackson Hole coming up on the 28th, and we know there's a bunch of members of the Federal Reserve that they are interested in tapering asset purchases. And asset purchases are really what's been driving the market higher. We have a lot of unrest in the Middle East, and that's, you know, may or may not turn into more geopolitical tension. So there's definitely, you know, some reasons to, you know, not be doing so hot in the market right now. The other thing too is we have not had any sort of correction in a long time. Even right now, the market is like, what, like 1% off the highs, or maybe like 1.5%. So it's really nothing. But in terms of like a 10% correction, we haven't had one of those in months and months. So yeah, there's definitely reason to be cautious. Let's put it that way. So let's go into our, and this is stuff we've been talking about this in our video for the past, you know, really like a couple days. If you've been watching these videos, you know that's really how I've been thinking about this for a couple days now. Okay, so market breadth today. Throughout the day, this definitely had some fits and starts where it looked like things were going to get back on track. And, you know, I was right in that camp of, hey, things look like they're coming together a little bit. At one point, IWM was positive. Qs were also positive. But by the end of the day, we had 11% advancers in the SPY. That's really not that good. You know, and that's so self-explanatory. Dow Jones, only 7% advancers. Finviz heat map, this thing was bloody. Check this out. Tesla was the shining star, and I actually day traded Tesla, and that one, you know, worked out pretty well. So I just happened to be in a lot of the better areas of the market, and as things started to turn, I basically, you know, was able to get out of all of them with gains. And then, you know, I actually entered some shorts, and then, you know, essentially crushed it on the shorts too. I don't know. Some days, like, it just all works. I don't know. But sectors, we had a lot of the areas that investors have been flocking into to try to get to safety. Those actually were underperformers today, which is interesting. It's a different dynamic. So medical devices, healthcare, and utilities, those have been like, everyone's been like, oh, okay, let me allocate to those while the rest of the market's very weak. Those were some of our biggest losers today. Biggest winners, ironically, you know, we had KWEB, the Chinese technology ETF, up 1.94%. We had the cannabis names up 1.75%. And then, yeah, we had technology, which was down pretty big. Capital markets, a lot of these more popular, more well-trafficked areas of the market really, you know, took a hit. Style factors all red for the day. And let's take a look. High beta was our best performing style factor, down 0.82%. For the most of the day, this was actually green, and then it flipped, you know, red throughout the session. And then let's see, worst performer on the session was high div, low vol. So this is another thing, like I've been saying the past couple days, like this is not risk on when you have high div, low vol, and defensives leading in a very weak tape. Now what ends up happening, like investors rotate into those areas, and then they rotate out of the market from those areas. So yeah, today red all across the board. So some of my trades, so today was different. A lot of times I go, hey, I'm not going to get involved in like the minute to minute, hour to hour minutia. Today I was like, let's get our running shoes on. I'm just going to sit here throughout the whole day and basically like be active. And so I ended up I have a lot of trading volume. So I'm not going to go into detail on all these. We'll go through a couple. But just to show you how like today for me ended up working out very well. My focus has been, and this has been something that like in terms of my trading game, what I've been like working on trying to get better at is trying to enter positions at proper buy points. Make sure proper. Never chasing stuff, never just getting in like a random trade location. Always a trade location with the best odds. If it works, keep it in the portfolio and just let it go. And then if it doesn't, very quickly cut it. That's been my MO for a while now. So I got long D-Lo in the morning for $50.11. This one looked like it had some potential. Let's see, D-Lo. I really like the pattern that it's putting in, but I ended up closing out of this because the company reported earnings after the bell. I closed it out, so it closed at 49.28. I actually closed mine out for a small winner at 50 spot 40. So a very small winner, nothing crazy. But in terms of just the risk management, NEEM reports their earnings after the bell. I'm not going to take that risk. So I was like, you know what? Not doing it. I got long some Futu common shares off of an undercut reversal setup. And that one as well. Hey, it looked like maybe this thing could keep running, but I started noticing towards the end of the day, things looked like they were getting a bit more precarious. Closed that one out for a small winner. Team was the only common stock I tried that did not work today. Team entered at 341 spot 20, took a stop at 339 spot 16, so less than a 1% loser. I was just basically keeping it tight and just trying to make sure everything in there worked. I closed out, so this is at 325, I closed out half of my DigitalOcean for 52.80. I had paid 51.02. And I just put here ambiguous market close, to say the least. Would rather leave some upside on the table than not manage my risk. And then DigitalOcean ended up closing pretty strong, I believe. So this one, yeah, really nice relative strength name. Yeah, DigitalOcean's still looking good. So yeah, I have half that on, still left on. I was very overweight DigitalOcean. I really like this company, but hey, maybe if there's more volatility, I can buy it even cheaper. And then I closed out half of my Ethereum position. Ethereum was my largest position. It still is now. And I closed out half of it for 27.40. I'd paid 25.72 for that. So yeah, a lot of cleanup throughout the day and a lot of just, being active. In terms of options, yeah. So I got long some Tesla calls at 9.49. And I was like, I'm just going to day trade this. Entered for 19, closed it out for 21.90. 20 minutes later. So just booked that really quick. I got long some, so this was crazy. I caught a really nice bottoming setup in IWM in the morning. And I got long some 216 calls for September. I put this right here, day trade. Added to those calls for 585. Just saw this bottoming setup that was forming, so crystal clear to me. Then I added again for 588. Then I closed those out for 631 at 1137. I said here, base hit. I'd love to try to keep these on for a home run, but I'm not seeing the edge. Then I tried them again later in the day. Stopped out for a scratch, so right at break even. And the IWM ended up falling apart, later in the day. What else did I do here? So I got long. Then at 303, market is looking very ambiguous to me. So 303, where are we? So this is, so 303. Yeah, that's like right around here where it looks like, hey, we're kind of breaking down. And I entered some puts on the S&P 500. And then we ended up basically like falling apart into the end of the day. So I entered those. I had traded things to the long side earlier in the day, but I had buttoned those up already. I already exited. And then at 337, I got long some August 20th. So those expire literally in 2 days. 440 puts for $1.80. I said this is just in case we have a horrible accident into OPEX, expecting these to go to zero. By the close, these were worth like $2.40 or something like that. So yeah, just, you know, it was basically like, hey, if we just happen to like plummet through this 20-day, you know, these could work. And then, you know, we ended up plummeting into the close for the most part. So yeah, we'll have to see what happens tomorrow. But yeah, today in terms of just like my sequencing worked out very well. And then SE. So SE is one of my only common stock positions left. So I closed my SE October 330 calls for $18.85. I had paid $15.55, and that's at 351. While the rest of the market's pretty much, you know, falling apart, you know, SE was still holding up very well. But I just decided, you know, let me just be prudent, manage my risk, and, you know, close out of the calls. I still have my common stock, and SE, you know, it's still looking great, to be honest. But just in case this goes really risk off, I just figured let me be prudent and get out of my options. So now at this point, I'm basically, you know, in safety. Trading day went overall very well. And, you know, I'm long in terms of my options exposure. I only have puts, and so far they're pretty deep in the money. So that's, you know, sometimes like I'm not really trying to like brag or anything like that, but just trying to convey like this for me, you know, things don't always work out like this where all the sequencing works, like whatever, but this is definitely like, you know, just a bunch of years of preparation, like building out risk models and like stuff like that. And then sometimes in just working on the process, and then sometimes it just, you know, works very well. Where with something like this, the worst thing that happens to most traders and like most trading services too, I'll be honest, like it's really just like, oh, the market's going up, we're buying calls, and then like we're buying more calls, then we're buying more calls, and then the market turns and the market goes down like 2%, and like your account's like blown up, where it's like, what happened? Like the market only went down like 2%. How'd you just like blow up and lose it all? And it's because like the vast majority of traders, they just have one speed, and it's like, you know, I buy stuff, it goes up, like, you know, we're in a bull market, this is great. But really, like in terms of like adding value and like becoming a better trader, it's all about just like trade-offs, man. It like, funny enough, we're trading, we're managing trade-offs. Most traders don't really do that. Like for most traders, like they can't get defensive. It's just not in their nature, because if they get defensive, what happens if the market goes up? Like then I'm gonna miss it. Like the market might go up 10 basis points. Like I can't get defensive. And most traders are sort of like in that headspace, and then they just end up, you know, every time the market goes up, they might make some money at like buying calls, and then as soon as it goes down, you know, they're essentially in the fetal position. So I'm just happy that, you know, going into tomorrow's session, like, you know, I'm pretty much sitting in the driver's seat, so I can, you know, I can observe the price action. If it ends up being very weak, you know, I'll make money on my puts. Like, you know, this is definitely a good situation. So we'll see what happens. And then this quote right here, so I actually keep this in my slide deck, just because I never want to really like get away from these quotes. I think they're so important. This is from one of Mark Minervini's books, so shout out to Mark Minervini. And this is, you know, I just love this quote. So he says, one of the great things about the stock market is that all comers compete in the same ring. In the stock market, you have the luxury of being able to stay on the sidelines free of charge, observing and waiting for the most opportune moment to wager. You get to see the market's cards before you bet, free of charge. This is a wonderful advantage, yet few exploit it. And, you know, my interpretation of that is you should have a system where you can identify if you're in an environment where, you know, the market's very conducive to your trading style, and that's where you really want to have your exposure. And then once the market's not really conducive to your trading style, then you don't really want to have as much exposure. If you're, you know, if you're a trader like I am, I think most people, their mindset is like, you know, if I can't find opportunities and I can't make money every day, like I'm less of a man or like less of a woman, or, whatever. So like, I have to be able to find something every day and whatever. And that is really not the case. There's always a couple of good periods in the market every year. There's like 3 or 4 periods where you can make a lot of money. But then for the rest of the year, you're better off like being at the beach and like not even trading. And August, to be honest, has been that month where if you just like took a vacation, you left at the beginning of August, I think most people would be in better shape than trading throughout the month. But yeah, and then this other one, the Achilles heel of most gamblers and speculators is the desire to play every hand, a common human weakness that allows impatience to override good judgment. So I think these are both very complementary. They both kind of get at the same thing. But yeah, in the days and weeks to come, I'm just going to make sure that I'm, as centered as possible, and just being patient in terms of jumping back into the market. If things look, they're just great tomorrow, like that's great. If they're not so great, that's okay too. Just try to keep it very even keel and just take what the market gives you, essentially. So let's take a look. Yeah, so that about does it for this video. Thank you so much for watching. If you like what you saw in this video and you're struggling in the market or anything like that, definitely reach out and join our community as well. If you like this analysis, you want to see more of it, we're in the community chatting pretty much all day, posting my trades live, all that good stuff. So we'd love to have you. Feel free to sign up at pristinecapital.net. Feel free to reach out to me if you'd like a free trial. It'd be awesome. So that being said, I hope you all have an awesome rest of your evening, and I will see you all tomorrow. I'm actually going to reward myself by having a really nice gym session, and then I'm probably just going to have like a nice dinner or something, and then just chill for the rest of the night. Have a good night, everyone.